And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Tuesday, August the 30th, 2022. My name is John Hoagland. As always, I appreciate you spending a little time with me this morning. And we're always going to be focusing on accurate context, good risk management, and patience. Today's National Beach Day. If you get the chance, get out to the beach. I don't think I'll be heading out to the beach today, but I can go to the beach in my mind at some point today, of course. Economic numbers. This morning, Fed member Barkin was speaking this morning, speaking about how financial markets are not the entire economy, and inflation is an obvious risk of reining in inflation, expecting inflation to kind of jump around a little bit. He says kind of like the aftershocks of an earthquake. We're still waiting for it at 8 o'clock this morning, right during Make Hoag Money, Case-Shiller Home Price Index and the FHFA Home Price Index. After that, at 9 o'clock this morning, Consumer Confidence in the Job Openings and Labor Turnover Survey. 10 o'clock, we do have another talking Fed speaking this morning in the form of John Williams. U.S. stocks are set to recover after Powell's Friday's, I'm calling it the Powell punch, gave the market a good punch in the nose, and prepare to be tested for today by today's menu of housing, confidence, and labor markets. Crude prices have dropped overnight. It's just like an ever-changing backdrop of supply issues versus demand destruction from global economic slowdowns. As always, we'll look forward to the API this afternoon and the EIA to get some more numbers on how things are going here in the U.S. VIX this morning is down about 3% at $25.43 index, off slightly at 108.58, and the yield on the 10-year largely steady at just about 3.08%. Make sure, if you do like the market forecast, hit the lucky like button and tell your friends. Sharing, commenting, questioning, feedback, and heckling are always welcome here on the market forecast, as well as love. Subscribe to our YouTube channel. You get notifications when we do go live. If there's something you'd like, something that's missing for you in the market forecast, let me know. jhoagland@topstep.com. It's Make Hoag Money Day. We're going to be going right after the market forecast into the Zoom room onto YouTube to do the Make Hoag Money for today. It might be an interesting one. We've got some numbers coming out right during the middle of it, so it might be an interesting opportunity for us. And as well, if you are interested in joining the Zoom meeting, being part of the decision-making process, having the ability to comment and to vote on these trades, use that link that I just put into the chat room there. It's the link to get you the link. It's going to send you an email back with the link to get to the Zoom meeting. If it doesn't come to you, check your spam folder. We had a lot of folks, I think, that have had that email come into their spam folder. And if you don't get it, let me know, and I'll make sure that you get it for the next time. Good morning, everybody. We have Dario first in the room, winner of the prize today. Patrick, Tachyon, Orion, Theo, Dark, Kevin, good morning, Brody, Shaw, chilling with Dylan, Dimitar, Andrew, Ron, and Jordy. Tachyon is going to be taking a little bit of time off, it looks like here. Going to take a couple of weeks off from trading. Always important to do, Tachyon. I know we're going to miss you. Hopefully you're going to miss us. But when you come back, you may find that your vision is a little bit more clear. Sometimes we get so close to what we're doing here, we can't see the forest because the trees are in the way. So I applaud you taking a little bit of time off, Tachyon. Things are going to look different when you come back. And again, we will miss you. James Harris, good morning, Scott Saw, and he conquered. JST Wave, Bill Phillips, much deserved break for Tachyon, Scott is saying. Yes, Marcelo, Glitter Sandwich, Jules, Three Lions, Trading Research, JP, good morning. Terrence King, Unicus, the quote for the day, trading is both a science and art. We can never match someone else's art, but we can, with time and practice, develop our own art based on our understanding of the science. Very good quote today. I've always said that there is as much art in trading as there is in science in trading. As a matter of fact, when I went to school, I went to art school. And you notice whenever we end one of these forecasts, I'm always reminding everyone to stay humble, grateful, and creative in their trading. So I agree with you. It is as much art as it is anything else. The Rooster is here. John Doherty is here. Good morning, JD. I know everybody's going to be looking forward to seeing you tomorrow morning on the market forecast. I won't be here. Mr. John Doherty, my good friend, is going to be doing the market forecast for everybody. I know we're all looking forward to it. Mango Heist. Good morning, Sarah Hall. Happiness, prayers, and love to you as well, Sarah Hall. GNR, good morning, David. Dan Trader, Rusty Golfer, my spirit animal. Khalid, Serenity Trader, Ola, Rob T, Brian Hardwork, Hogan, good morning. Tony, John, Traveling Tradesman, looking at a lot of trees. It happens. Sometimes you just need to look away for a couple of days, maybe a week, maybe 2 weeks. In the case of Tachyon, things always look a little bit different. You know, it's kind of emotionally, it's a kind of a love-hate thing, right? You love to take some time off, but you hate to be away from the markets, but you hate to be by the markets, so you need to take some time off. It's just something that I think all have to do from time to time, because when we come back, they seem to look a little bit clearer. Alfred, let the sun shine in. Yes, Anissa. Daryl, Hagel Matters. Good morning, Michael. That is a great quote from Unicus, isn't it, Sarah Hall? Eric Hill, good morning. Get money. Stephen C. and Luke. Make sure you hit that lucky like button, and we're going to get into the charts real quick here this morning because, again, we've got Make Hogue Money. We want to get to that as close to 820 as possible so we can start discussing ideas and opportunities. You're looking for a couple of people to be able to join me and to be able to speak today, so we will get to that when we get there. Let's take a look at the E-mini S&Ps on the daily chart right now. All right. So we had a little boost in open interest yesterday, estimated 7,300. Friday's boost in open interest was initially on the preliminary bulletin an additional 20,000, and it ended up being only 3,200, that boost on that open interest on Friday. So the break on Friday didn't have as much new business in it as it was initially thought. Yesterday we added again an approximate 7,300. It's probably going to be a lot closer to that today on a little bit lower volume. So we've got the market seeking some kind of balance. It almost appears as though there may be a bear flag forming here on the daily chart. Again, this market is still seeking balance after the Friday Powell punch, and we are expecting a lot of data this week, including what we have today, jobless claims tomorrow, PMI and ISM manufacturing, construction spending on Thursday, and then, of course, the unemployment situation, which we used to call unenjoyment, is on Friday. So lots of data yet to come out. So here's our little potential bear flag that we're kind of looking at here. Here's the 30-minute chart. I've kind of put the channels up here for our bear flag. What's a bear flag? Well, price comes down to it. It's a narrow range in the opposite direction, lower volume. We didn't really see tremendous volume on the move down, not tremendous volume yesterday. We're going to have to see how things play out for us today. But as far as the 30-minute chart here in short time frame, we've got our little channel. We've got a couple, 3, maybe 4 little points of contact here. We've got 1, 2, 3 points of contact up here. We're right in the middle of it. We have a little bit of overnight inventory to the long side that is apparently already being reconciled. It's taking us back into range and back into value, which tells me I'm probably going to try and remain patient and wait for opportunities as the day goes on. Yesterday, we had our open. The better trade locations did occur as the day went on, even though we opened out of range and out of balance. Today, we're opening in range and in value. Usually likes to make a liar out of me, but it may mean that we're going to be patient and wait for better trade locations as the day goes on. I'm really going to be focusing on the extremes of this channel that we are currently in. We affectionately call these Danels in honor of our good friend Dan Hodgman. And I'm going to extend this one, if it'll let me, because that could be the breakout point from a bear flag. Of course, we're going to have to see how this goes. And a lot of this information coming out is, of course, going to be affecting price. But I'm going to trade what I see. And as Unicus has pointed out, I'm going to remain creative. I'm going to be accepting of information that the market may provide for me. So stay patient today, inside range, inside value, pretty close to VWAP for the session so far. Not seeing any real urgency to be into anything too early. And that's kind of unfortunate because we do have make whole money today. I was looking for some kind of more bigger opportunities away from balance, but we're going to see what we get, and we're going to see if we can't make a little money. Thursday, we had a couple of small losses. We left a trade on after make whole money, and we hit our profit target on that. So we ended up with a positive day. Even after 3 or 4 small losses, we ended up making money on the day. Don't you just love reward over risk ratios? It's so exciting to me. All right. Crude oil. But the economy, it seems to be what everybody's saying after the rush up to the close above weekly kickoff high. We added 9,200 estimated in open interest. That's what we lost on Friday in crude oil. So we just brought all those traders back into the market. Higher open interest, but lower overall for the last couple of weeks. So we've been losing open interest as the market has been moving higher overall. Okay, we've had 2 positive days of open interest in the last 2 weeks, which is while we're trying to move higher, largely somewhat range bound. Upside structure does remain in short time frame. There's some structural weaknesses down below, however. Here we go. So that line just represents the kind of low end of structural upside, higher lows, higher highs, higher high, higher high, higher low. We do have a little bit of unfinished, perhaps, business above in the form of a naked point of control, but the visuals that are much closer and more, I think, reachable for us today are down below. We settled above weekly kickoff high. Settlement was 97.01. Weekly kickoff high was 95.80. So we got a pretty substantial move to the upside here with increasing open interest on that push and close above. We are back down below it, showing signs of rejection. Overnight inventory to the short side. In range, yes, just opening right at the bottom of value. Maybe a little bit of possible repair in this profile up above here. I'm really, I think, going to be focusing on if I get an opportunity near weekly kickoff high, that might be an interesting opportunity for an execution, or anything down near this trend line. Weaknesses, gap, naked point of control, another gap, And then all the way down near weekly kickoff low is another naked point of control. Weaknesses above, not much. Not much. Overnight inventory, again, shorts, reconciling back into value, says to try and stay patient. NASDAQ, which has been kind of telling a whole different story, is now in line, I think, with the mini S&Ps. Overnight inventory, open interest, we had a plus of 1,000, not tremendous. Open interest, again, higher, volume lower, very similar to the S&Ps. Starting to form a bear flag. The breakout down below that and any momentum that happens would prove that. We're not proving anything here just yet. It is accepting and trying to recover, seeking balance. It is attempting to kind of find the area where two-sided trade can occur, which is what these markets do. Here's the 30-minute overnight inventory long, reconciling back into value. Settlements down here, 12,492.75. We've got our potential bear flag here. 1, 2, 3, 4 points of contact. Solid trend line on the bottom of this. If we break out down below it and find some momentum, that might be a pretty decent opportunity for us. We're looking to see if we can have our bear flag break. Only time will tell. Again, opening in range and in value suggests patience. My focus again will be on this trend line down here for sure, and perhaps an opportunity up here. Did we close the gap yesterday? We did not close the regular trading hour gap yesterday. This is extended trading hours to me. The settlement is up here. Okay, it's not down here. Settlement is up here. From Friday. I don't know what happened to it. It went away. So we did leave a regular trading hour, small regular trading hour gap up here. That might be interesting, but it is again well within the range of expected trade today. All right, I've got a 80-pound German Shepherd laying across my feet right now. She was trying to make me late this morning. She was acting like Sniffy long droppings, and now she thinks, I think she knows I'm talking about her. She's looking at me. All right, gold. Volume and open interest were relatively inert yesterday. Not a big change, a little bit off a little bit. Open interest, we added 500. Nothing too impressive. Failure to accept below weekly kickoff low. Failure to accept below last week's low. This zone down here looks like it's going to be relatively important for us to be able to find some decent opportunities today. This test of last week's low, weekly kickoff low, I believe offers some opportunity, which has been somewhat hard to find here in gold. Here's our 30-minute chart. So we've got settlement up here, 1749.70. We were holding some overnight inventory to the short side. Our 730 bar tested to last week's low, not finding any acceptance down in that area. This is a relatively large zone to be looking for opportunities, which does happen from time to time, but I believe there are some fish somewhere between last week's low and weekly kickoff low. There's some fish down here. If we can get them, if we can get over them, sink a couple of worms, we might catch a couple of lunkers. Again, we've got overnight inventory to the short side. No real reconciliation of that. Maybe just a little bit here. Take a look at the euro. This has been, in my opinion, backburnered for the time being. We're coming into rollover for the currencies. We've got an additional 5,300 in open interest, but I'm attributing that more to rollover than anything to directional, because obviously we're still range bound, we're still in balance. There's still a lot of confusion. Look at the length of the shadows on these bars. Doji, close to a doji, spinning top here. We've got just no real directional or decisive activity in this market. Take a look at the 30. We've basically just been taking care of old business. We closed this gap, tested to this point of control, closed this gap. This was Friday. Now we're right back in the middle of Friday's range with some maybe overnight inventory to the long side already looking to be reconciled. We're trading inside range, inside value in a very narrow range from yesterday. I'm really if I keep even part of an eye on this market today, I'll be amazed, which usually indicates that something is probably going to happen, but I'm not really looking for it. The 10-year, we are now in December. It is hard to believe Christmas Treasuries already. It was 90 and sweaty outside yesterday, but we are 3 months from that Christmas, so here we go. There is a 2-tick premium in the December from the September contract, so no real urgency to change any levels that you might have on your charts. Continuing this push to the downside as rates continue to move higher, Treasuries continue to move lower. Rates, when I was looking at this morning, they were down 3 basis points, nothing tremendous. And we are finishing up now we're in rollover, okay? Yesterday we were looking at the September. Today we are looking at the December contract. So open interest in volume is going to be very difficult, blurry, and hard to read. Take a look at the 30. If we're going to be trading what we're going to see, we're going to see. Overnight inventory, long. The opening range was left at the high of the session. That opening range high was 117.14. I've put this little red hashtag right up there to let us know that the opening range was the high of the session. Overnight longs taking us right back to where the overnight started. Right back to settlement, right back to a very small range. We've opened with a gap. We have now closed the gap from Friday to Monday and from Monday to this morning. We had some pretty cool things happen this morning and some pretty decent opportunity, but I'm afraid that has passed. Now we're going to have to try and stay patient as we are back in range, back in value. We've already checked through this gap. Only thing really left to check is this naked point of control higher. We do have a weekly kickoff low considerably lower. Last week's low in play as we speak, which happens to be exactly at settlement 117.03 and a half ticks. And the NASDAQ, natural gas, I seem to make that mistake a lot. Balance, range, rules remain. We were looking at these double bottoms here as potential range-bound activity. Yesterday, last week's low basically contained our activity. We are at that now. We added 11,000 in open interest yesterday, mostly in the October, November, and December contracts. So some pretty decent increases in open interest coming in the next 3 contracts. Take a look at the 30-minute chart here. Settlement up here, overnight inventory to the short side, looking at last week's low and potentially this week's low as an opportunity for us. If we can't accept down below yesterday's range and last week's low, we're going to end up with some shorts in short time frame who might get a little bit nervous and do what we just did in the 10-year in the opposite direction. Maybe we're too short in short time frame down here and they move back towards settlement or where the 1700, the 5 o'clock central bar opened up, which is right back up here. Seeing, okay, now we're starting to see a real test of yesterday's low, last week's low. If we can't hold there, our next potential extreme of this area of balance is this double bottom right here. This is not necessarily strong and bodes for revisiting. So I would look perhaps a little bit deeper for longs if I was looking for longs here. It's such a nasty, vicious market. I just can't trade it. I've traded twice successfully this year, and it just makes me nervous. So I'm kind of stepping back from it and focusing on the things that I trade more often. All right. All right. Dan Emmons, it's good to see you. Good to see you back here. Vince, Robert, good morning. My brother Rick is here finally. Good to see you. Luke is here. Mike, it's good to see you. Vlad, good to see you. Thank you, Mike. Last time we dropped 1,000 points on the Dow was 11/26/21 at the 9-month 1 day ago. 1,000 points, 1,009 points. Interesting timing there. Alrighty. All right, let's take our deep breath and be ready for Make Hope Money, or if you're not going to join us, we will miss you. Have a great trading day. Stay humble, grateful, and creative. It's as much art as science. Thank you again for the great quote, Unicus. Thank you all for joining me. Thank you, thank you, thank you. Good morning, Joe, Andrew. All right. Make Hope Money is going to be on YouTube also. Yes. All right. Joao, good to see you. Trade well, everyone. See you in the pit in just a few minutes. Trade well. Another deep breath.